So without further ado, so the plan for today, I'm just gonna switch. So the plan for today is really to discuss a little bit of background behind what the T1 family file or TIFF is. Because the T1 family file is based on the T1 PMF or the tax data, we are very cognitive of the security and the sensitivity of the data. So I'll just cover over just a couple of points. I'll talk about the population that's covered by the TIFF, how it works. One of the big strengths is the geography, so I'll spend a little bit of time discussing that portion of the TIFF. What's interesting, it's nice for you to know what is a database and where it comes from, but then how do you use it? So I'll go over a couple of things that we've done over the years, how typically the data is used. And then I'll just briefly mention the how to get the data, because I think there's various sources that you have access to. So the information will be included in the presentation, but I'll skip over. So as a reference, you'll have it, but I'm not going to spend too much time on it. Then I'll talk about the various income data sources that I mentioned at the beginning. And as usual, we are trying to make the product as best as we can. And as time evolves, technology and resources evolve. So I'm going to talk about the future development that we're planning for the T1 family file. At the end of this presentation, you'll see an exhaustive list of the TIFF table that are available through the web. So if you're curious, you can definitely go there. And today I'm presenting in a sharing screen mode and not in a presenter mode. So you will not be able to navigate through the slides. The reason is for technical reasons. It's easier and it's safer for me to know that you're actually seeing my screen and things are working properly. So let's start. So the T1 family file. So maybe you've used the data, you saw family total income, or you saw individual income and maybe government transfers. And so having a little bit of where does that data come from and why was it produced in the first place could be very interesting. So the T1 family file is based on the T1 personal income master file, which is tax data coming from the Canada Revenue Agency. It includes, the goal is to release data at the individual and family level, focusing on income data with a little bit of sociodemographic characteristics available in the dataset. So the big strength of TIFF is because the source is covers so many people. One of the big strengths is to go at various levels of geography, very detailed level of geography, such as census subdivisions or municipalities. So the mandate for TIFF is really to release income data for individual and family at low levels geography. Now, I mentioned that the TIFF is available at the family income data, but that's mostly was mostly created in the mid-1990s. And the stability of the series, the data series, would start more before in 2000, where the methodology to build the family formation was much more stable. So earlier years for TIFF, when we talk about family, should be used with caution, but usually what we release on the web are data from 2000 onward. So I might be switching from using tax filer data to TIFF database to T1 family file. All those terms for me in this presentation will be focusing on the same topic, which is data that's been produced with the T1 personal income tax return. So as I mentioned, this data is very sensitive. So at StatsCan, one of our main mandate is to ensure that confidentiality and privacy is respected. To do that, there's a couple of things that are put in place. Know that we only give access to that data to people who need to know. The micro data is only made accessible to people who are heavily
Dominic, you got muted.
Sorry, I'm sorry, but I didn't touch anything. Did I? Where was I at the security statement?
Yes.
So I'm good continuing with that. Okay. So funny things, a colleague of mine, so just a sidetrack, a colleague of mine this morning mentioned that Teams was acting up and doing very interesting things. So I'm wondering if Santa's is acting up. So hopefully I'm on his nice list. But let's continue. So I was mentioning that people have access to that data are only giving access on a need-to-know basis. And all access is actually needs to be approved by directors and upper management in order to take effect. So people will only access data that they've been granted access to, and they will have only access to the variables, so the items that they've been granted access to. Additionally, we ensure that there are some confidentiality rules or guidelines that are put in place so that even though we release some summary or aggregate statistics, these statistics will not breach confidentiality. So we'll ensure that, so we'll do some rounding and suppression when it's necessary. So that kind of covers the background and the context in which the data is produced. So now let's talk about the TIF population. So really the core of the of this product. So the T1 family file is produced, as I mentioned, using the T1 personal income tax return. It also includes some information from the Canada Child Benefit file and the T4 slips, which are slips that are provided by your employer when you have wages. So the people who have filed their taxes or receive CCB are included in the file. There's also additional information that's available through these files that allows us to identify the non-filing spouses, so spouses who didn't file their taxes, but had some activities or were married to a tax filer or in common law with a tax filer, and non-filing children. So for filing spouses, most of the information comes from the tax form from their spouse and their T4 slips when it's available. For non-filing children, it comes from the CCB file, the Canada Child Benefit file, the BIRD file, which comes from another division within the agency, and the historical children file, which is basically a list of potential children that the TIF has identified over the years. So T1 tax filer can give their address outside of Canada or inside of Canada, depending. Where they want their mailing to be addressed. And so when these people who are providing an address outside Canada for tabulation purposes and confidentiality reasons are actually excluded from their standard table. However, they are included in the TIF database. So if someone needs specific information about these people, we can produce aggregate statistics and apply confidentiality rules, but they're not included by default. So this is what we call the non-resident. But if you refer to the citizenship, well, permanent resident, temporary residents, this is not an information that we have on the files, but so they might have filed their taxes giving a mailing address in Canada, and if so, then they will be included in the data set. If they gave a non-Canadian address, then they will be kept on the data set, but not included in the standard table. So that's more or less what we have. So we have a chunk of people, about 30 million, who are tax filers, and there's about 8 million dependents, which could be non-filing spouses or children. 98,000 of them are actually outside Canada. So this universe of individual actually allows us to create 10.8 million census family and 7.2 million individuals not in census family. So you might be hearing those terms very often. I have no idea what the rate of adults living in Canada and not filing taxes is, unfortunately. That's not an information I have. We are using the tax form, so we are using tax filer data, so we don't know who else is missing from the environment. What we know, though, is that there's multiple vintages of the file, and we get a very late version of the file that has most of the tax filers. We know that there's an historical file that comes in, what we call the historical file that comes in from the CRI 2 years after we release our data. And usually there's about 1.5%, I believe, more tax filer at that time. But so I don't know how many tax filers are not filing taxes, how many Canadians are not filing taxes, unfortunately. But when we compare with the census of population, the numbers align fairly close. So here we're talking about 2022, 38 millions. I'm expecting that when we get to 2024 TIF data, we're likely going to be closer to 40 million, which is the number that we reached at the beginning of the year, at the beginning of the summer 2024. Okay, so this is the TIF population. So I did mention that there's a big universe that is individual. So when we release data, we're going to have data for each individual who file their taxes and add income. And it includes, so when I say file their taxes, it could include basically anyone who has income. So non-filing spouse with income would be included in the numbers. Of those individuals, we build family, as I mentioned earlier, and we call that the census family unit. And we break this unit of analysis into two parts. So you have persons not living in census family, which would be anyone who were not assigned either a spouse nor a kid. So that would be person that is census family. It doesn't mean that they're living by themselves; they're an attached individual, but it means that we were not able, based on the information that was available, to assign a spouse or a kid to, or the parents to that person. Then the other part for that unit of analysis, the census family. So you have couple family with or without kids, and lone parent family. So that information is actually available as I described it on the file. So you could tell whether a person is in a couple family, if they have kids or not, if they are in a lone parent family, or if they are a person not living in census family. So when we release data at the census family level, we are going to include most of the time these two universes, so census family and persons not living in census family, to ensure that we cover the full population. If you see a name like census family only, that means that it includes only couple, family, and lone parents. Otherwise, if we talk about census family unit, that's when it's going to cover everything. So to make it a little clearer, I have that little diagram that explains the difference, because sometimes you're going to be hearing about households or economic family and even census family, and all those concepts are integrated. So if we start by the blue circle, this would be the census family, not the census family unit, like I mentioned earlier, but really just the portion where you have couple family and you have lone parent family. Anyone who would not be in one of the two circle, the two blue portion, would actually be on the TIF, persons not in census family. Now, if you look at economic family, then you would be looking at census family plus any other related person. So it's possible that the person in couple family is actually living with grandparents or with nieces. And then in that situation, the economic family would cover the couple plus the niece that would compose one census family, one economic family. And then if you're looking at roommates or a lone parent living with a roommate, or if you're talking about two families living together, that would consist of your household. So this is an oversimplification of the concepts. So households being the bigger circle, economic family the middle circle, and the smallest circle would be census family. So these distinctions are important when we try to do some analysis and when we compare income data from various sources. So quickly, just a review of what I discussed. So on the TIF, we are talking about individual and census family. And the reason why we're only addressing the census family and we're not going to households or economic family, like I introduced just earlier, is because we don't have enough information about relationship available on the tax. So in order to create some kind of family, we are using what I call the T1 PMF, or the tax data plus the CCP. And in other relationship, we don't have any indication of their relationship between people. And so tax data is used to do that and to do the census family, and it's based on mailing address. So someone could ask, well, why are you not making households? Because you have the mailing address, and a household would consist of people living in the same dwelling. Well, in this case, it would work for part of the population who have simple addresses, but when we go into more complex regions, or regions where the addresses are not as precise, or rural areas, or places that are using PO boxes, then creating household becomes a little trickier. So the TIF tried to build household, I believe, in 2006, and the conclusion wasn't really successful. There were a lot of challenges and nuances and hypotheses that would have needed to be made, and it wasn't conclusive. So I mentioned earlier, it's important the comparison between household income, economic family income, and census family income should be done with caution, because if you're comparing, you might not be comparing actually the same people. So if you compare me and my parents living together with me and my parents and my spouse and my kids living together, the income is going to be different. And we know that if you're and there are some regions that have a tendency to have households that are more different than census family, or economic family more different than census family, especially regions where there are multi-generational or extended family living arrangements, such as Ontario. If you were to compare data from Ontario and you were to align census family data, household data from Ontario and Quebec, for example, well, Quebec has less multi-generational or extended family living arrangements according to the census versus Ontario. So the family size would vary between household and census on the Ontario side. But then on the Quebec side, households and census family would be fairly similar. So you can see here on the Ontario side, you would include, let's say, 5 people, because you have 2 grandparents, parent and 2 kids together. And then in Quebec, you would have only the parent and 2 kids together. So you can see how the income comparison can become a little tricky when you try to compare households and census family. So I think that covers kind of the population framework work. And so I was reading a question here. What was the rate? Not what the rate. I'm not sure. Okay, yeah. I think I answered that question. So we covered the TIFF universe, how to be careful about the unit of analysis. So now I'd like to talk about one other big strength of TIFF, which is the geography. So I mentioned earlier about the fact that we have mailing address from the T1 tax data file. And so from that mailing address, we're actually deriving 2 types of geography. So the mailing address that is used is basically composed of an actual street address and a postal code. But we don't really use the street address other than to create a postal code if we need. So we only use it to derive postal code. So postal code is the main base to derive geography. So the geographies that are derived are the census geography, which is basically the official boundaries that is used at Statistics Canada to release data, and that is related to the census of population done every 5 years. And the other type of geography that is available from the TIFF is the postal areas. These postal areas are not necessarily matching the official boundaries of StatCan, and it's defined by Canada Post for mailing delivery purposes. So usually we would recommend not going for postal areas except in very, very rare instances, and really encourage people to using the census geography. That being said, both are available. If you have very specific questions about each of these types of geography, there's a section in the technical reference guide that's available on the internet. So that's the last bullet of this slide. You can access section 4 and read a little bit more about each of the geography. I will, however, in the next few slides, present an overview of the 2 geographies that are available, which are census geography and postal geography. So this little diagram on the left is really representative of what the census geography is on TIFF and what is available. So you can see that there's a link between census tract, CSD, CMA, CD, and then it goes up. So these are acronyms that are used at Statistics Canada. And so you have the Canada level that's available, province and territories. The Fed is also available, federal electoral districts, and it is updated every 10 years. The economic region, census division, and census subdivisions are also available. And usually CSDs will roll up into CDs, and CDs will roll up into ER and ER to provinces. I say usually because there's one exception in Ontario, which is Alton is split in 2 economic regions. And so the last section of the census geography is the census metropolitan area or census agglomeration. And to ensure that we cover the country, we include a category that's the non-CMACA by province. And then some census metropolitan area and all census metropolitan area and some census agglomeration are what we call tracted, so they will have census tracts. So I'm just going to mention here that these census geography are updated on a 5-year basis. So every time the census comes out, the TIF updates the process so that they reflect the most recent geography available. So starting with 2021 TIF data, we were using the 2021 census geography or standard geographical classification. Before that, from 2016 to 2020, we were using the 2016 census data. And before that, we were using from 2012 to 2015, we were using the 2011 census data. And this census geography. And this is really important when you try to compare at the lower level of geography, when you try to do historical comparison. Because if boundaries have changed, then the reason for your change might be partly because of a change in trend, but also partly because of a change in population. A really good example that we had a couple of years ago is when the Saint-Jean-sur-Richelieu was a locality that was outside of Montreal, was merged to the CMA of Montreal. So we saw a large impact on the population of Montreal and their median income for that CMA. Note that, again, here the postal code is used to generate those census geography. What we use to actually upgrade to attach the census geography to postal codes is what we call the postal code conversion file. So you might be familiar with that. It's a starting point, but we need to do additional research to ensure that a postal code is assigned to the same geography over time as much as possible, or change only when really a change has occurred. So I mentioned that the postal code is the main unit to derive the census geography, and it creates a little bit of problems because postal code do not always respect census boundaries. So what happens in these cases is that TIF needs to make a decision. TIF needs to make a decision, and this slide shows really well how the decision making is done. So if you live in a postal code that's a very large postal code, it's a rural area, so KOC 3X1, and we know that that postal code is assigned to it covers 3 various CSDs, but we know that in CSD1, there's very little population according to the census. Now, KOC 3X1 actually covers fully the CSD3 and CSD2. Well, because CSD3 has a smaller population than CSD2, this postal code will be assigned to CSD2. There will be no population in CSD3, and the population that has KOC3X1 and physically is located in CSD1 will also be included in CSD2. So this is not a problem in areas where it's more urban, where population is more concentrated, where postal codes more or less follow the census boundaries, but it's more problematic in rural areas or rural fringes of CMAs or CAs. So you can see how comparison with other data sources, you need to know that in the back of your mind so that you can logically analyze and draw the appropriate conclusions when you look at the data. Usually, if someone asks for CSD data, we're going to provide some coverage rate that compares either the data with the census population at the CSD level, for example, so we're going to, and for non-census year, we would compare to the population estimate to give you an idea of the precision or the comparability with the census geography. So these challenges with postal codes traveling multiple regions are going to be more impacted by low levels of geography, so such as CSDs and census tracts, less so at the ER economic region level or at the census division level. So challenges are really when we go into lower levels of geography. So some of you might be aware of the fact that the census releases data at the dissemination area. When we did some studies to identify the precision of those census dissemination area, my apologies. We know that some are really good, some are really well covered by the TIF, but some others are not so great. So we have maybe a 40% of all the dissemination areas that are well covered, precise enough, covers more or less 10% difference the census population. But so sometimes it's good, sometimes it's not so good. So we don't recommend going to the dissemination area with the TIF, but it's available if someone really requires it. I'm not going to spend a lot of time on this one. It's available on the TIF. So this is the postal geography. It does break the provinces into 3 big sections. So city totals, rural communities, and other provincial totals. And the city totals are broken down into 5 items. So city sometimes is close to the CSGs, but not always. The rural communities are more or less based on it's based on the delivery mode that Canada Post provided. So if you're not a residential delivery, then you're likely going to be in a rural community. And other provincial totals would be for any community that has less than 100 tax filers. In order to ensure that some data can be released, then you would put everyone who are in a region with less than 100 tax filers in a province together. So they might be all over the place in the province, but because of the size of their community, it's small enough so that they are put together. And I'm going to spend just a few more minutes on the urban forward citation areas that is currently available off the shelf from the standard product. And rural postal codes, because these ones, even though their name says that they are based on urban forward sortation areas, so forward sortation areas are the first 3 digits of a postal code. This one is also based on delivery mode. So again, similarly to what I mentioned earlier about the other provincial totals, if an FSA has a delivery mode that it was for the rural communities. If an FSA has a delivery mode that is not urban, then they're not going to be part of that. And also some FSAs will be split within cities, some FSAs will be split between 2 cities. So it doesn't align perfectly when you look at postal code. So all the data at the postal code level is to be used with caution, which is why we really recommend using with the census geography at this point rather than postal geography. Some people will use it for historical reasons, but again, it's not something that's going to be supported in the very long term as that's done. As we're trying to get rid of that, we're trying to make other things available to ensure that we're kind of covering the needs. So be assured that we're taking that into consideration as we develop other things. I think that covers the geography. So I'll move on to the more interesting part, maybe for some people. So what is really available from the TIF? So here you have a list of examples of things that can be expressed using the TIF. Some statistics can be created. Usually we talk about counts, median, average, aggregate income, percentiles, income ranges, and ratio. We also do sometimes Gini coefficient or other inequality measure, but that's based on people's specification, and they are not released as is on the StatCan website. So things like the number of family by sources of income or the median income of families, the annual trends on data on individual in low income situation, comparison between different groups of income. But as a general rule, if it's not released on the web, it might still be available on the TIF. You would need to be contacting some of the representative from Statistics Canada. But as a general rule, if it's on the T1 form or one of the main schedule of the federal schedules, then it's likely that it's available on TIF or there's something we can do. But if we think about
Dominic.
Yeah, go ahead.
There's a question asking, will SLA be a layer going forward?
So what is SLA? Remind me.
Martin, you can unmute yourself
Martin,
if
you
you
want
would
to
like
unmute
to.
yourself? And I take French or English questions. I should have said that at the beginning. I'm Francophone, by the way, if you haven't noticed by my accent. I don't know. I don't know what the self-contained labor area are, to be honest.
It's a recent for recent release. It's used for labor market indicators that basically where you group together a couple of smaller CSDs that are a functional labor group.
Okay, well, I'm not aware of these ones, so thanks for informing me. I don't work that closely with the labor force survey, which is probably the data source for this. I can totally look at that. I will mention though that later on in the presentation, I talk about how to get data from StatsCan, and one of the way to get data is to produce custom tabulation. There are fees for custom tabulation, but with those custom tabulation, we can do user-defined geographies. So if you have a concordance between postal code and, for example, in this context, self-contained labor areas, then that's something that can be done. Again, there's some exchanges that need to take place, but definitely something that can be considered if you can find a concordance between the unit of geography that's available on TIFF and that geography. So thanks for that question. Second question, is low income denoted anywhere, or is it an arbitrary, oh, I can't say that one, line marked by the analyst assumptions used? So I'm not going to spend too much time on this question, but so Safia, I'm gonna talk about it just a little later when I'm done with the main income concepts. If you're okay to wait, it's just going to be easier for me to talk about it when the slides are there. It's going to be easier for you to understand what I'm talking about too. So thanks for your patience on that. Usually what we focus on when we release TIFF, even though there's a lot that's available, are the main income concepts. And so we start with something that's called total income. And you might think, oh, well, yeah, I have like 50,000 per year because that's what my salary is on a yearly basis. And that's my income. Well, we might be missing a little bit of nuances there and things that are going to make differences in your historical trend, or even when as politics, government politics changes. So you have total income, and total income, when you subtract the federal income taxes and the net provincial income taxes, you get to your after-tax income. That's income, and here I'm talking about low income, but that income is used usually to express low income situation of that. Now, if we take the total income, there's multiple components that actually compose total income. They are broken down into two things. So you see there's the market income and the government transfers. Market income would be money that you would have generated yourself. So for example, self-employment income, wages, salaries, and commission. So here you have the list of things that are included. These are the standards at StatsCan. So whether you compare different sources together, they should align fairly closely. TIFF is just a little exception because of the historical trend. But so you have pension, you have other income, and these detailed information are actually available on the T1 family file. So those are the sources that are included when we talk about the market income. Yes, the presentation will be available after the session. There is the second part that composes total income is government transfers. And they are taxable government transfers, but there's also non-taxable government transfers. There's a lot of effort that is put at Statistics Canada to actually establish the amount of money that's done, that's issued for Canadian, and that is non-taxable. Because as I mentioned at the beginning, we're using tax data. And so what is of interest to the CRA is actually what's taxable. So when it's not taxable, it's possible that it's not available in tax data. Not all of them, some of them, and there's some challenges with the reporting. For example, in the non-taxable section, you see that there is social assistance. Well, social assistance is a vague concept that can be misunderstood when someone files their taxes. So sometimes social assistance will not be reported. Sometimes a lot more will be put into social assistance. So there's a little bit of work that's done at Statistics Canada to clean up those variables. And so these are kind of the main income concepts. There's a couple of additional items in the tax world that are very relevant when we look at income data, and that's capital gains and employer contributions, but they are not included in total income, and they would have to be part of a different request. On the TIF, we do have a little bit about, we have one table that contains employment insurance contribution. We have a couple of tables that talks about capital gains, but it's not the main focus, and these concepts are not included in total income as they are not actual regular income that feeds into your expenses, that helps with your expenses. So those are the main income concepts. So as promised to Safia, I'm going to go into the low income line. So give me a minute. Okay. So there are 3 major income lines that are produced at Statistics Canada. So you have the low income measure, referred to as the LIM. We have the market basket measure, MBM, and we have the low income cutoff, which is the LICO. These are 3 different measures. But if you think about the poverty rate that the government is publishing, well, that's the MBM. So every time someone refers to the poverty rate, we should be talking about the MBM. The low income measure is not a poverty rate, and the LICO is not either a poverty rate. So the low income measure is available on the TIF. It's based on a threshold that's established at the national level, and anyone who's below that 50% of that median, which is a threshold, is going to be considered low income. So national median income is $50,000. So 50% of that is $25,000. So if you earn less than $25,000, then you would be considered being low income. This is an oversimplification. So when we calculate the low income, we actually adjust for the family size so that we take into consideration if a family has multiple people living together, multiple income sources. So we kind of try to take into account that. StatScan recommends using the after-tax low income measure because it really takes into account government transfers that have been issued to Canadian overall. It's a better representation of what the income is available. But if someone has specific questions, other low income measure can be calculated. So for example, someone could decide that they're interested in the market income low income measure. So that's something these are the kind of things that can be done, but is not available right up from the T1 family file. The second low income measure I mentioned is the poverty rate, or helps create the poverty rate. And that's an income that's a measure that's based on a basket of goods. So that basket of goods is built based on your family size and your area of residence. And if your income is a certain amount lower than the price for that basket of goods, then you're considered to be in low income. And so that basket is actually updated fairly regularly, and the last review was 2018. But I want to say that there's probably one that's coming out fairly shortly. That's going to be the most recent review. Now, the last low income line that's available at StatScan is the LICO. It's not recommended to use that. It's really, the other lines are more appropriate, and I'll explain to you why. The low income cutoff is actually based on a basket of goods that was established in 1992. So you can imagine in 1992, cell phones weren't as important as they are today. Internet connection wasn't as important today. Cable was like big thing to have. So these kind of things have changed so much. Our consumption have changed and our lifestyles have changed over time. So that basket might not be as representative of cost of living today, even though it's adjusted for inflation. So those are the 3 main low income measures that we have at StatScan. Now, another one is the Gini coefficient. For the 2021 StatScan TIF release, we talked about the Gini coefficient. So these are the kind of things that can be derived again on a custom basis. So if I specifically talk about the TIF here, the TIF, what's available is the Census Family Low Income Measure. So you might remember at the very beginning of this presentation, I discussed the idea that households versus economic family versus census family, this makes a big difference, right? So here, we're really talking about a low-income measure based on census family. So if you were to use other data sources, the LIM could be calculated on households or even economic family, depending on your needs. But usually household is the main unit of analysis that's used to calculate the low-income measure rate for the Census of Population and the Canadian Income Survey. So here there's an example of a problematic situation. So you have grandparent Joe has limited income, he's retired, he might be on the old age security, and he lives with his daughter-in-law and his son, and they are wealthy, they are high-earning tax filers, they don't have kids. So on TIF, you would see Joe would be a person, a family on its own, or a family unit on its own, and would likely be in low income because he has limited income. And the couple family would actually probably not be in low income because they have high earnings. And if you were to look at these three people on the census, the three of them would likely not be in low income. So these are the kind of impact that can have the using census family rather than household and things like that. I did mention at the beginning that household is not available on the T1 family file, that we did some tests in 2006. Eventually, we're hoping that we're going to be able to use new files to hopefully integrate a good household formation to the file, but we're not there yet. So if you're interested in having a little more detailed differences between the various data sources, I would really recommend, not because I wrote it, but really because it has a lot of information, this paper that was released towards I think it was in 2017, where we compared the low-income measure between the TIF and the Census of Population. It kind of gives you a really good idea of the main differences, one of them being the coverage. The population is not the same. Okay. So I talked about the fact that main income sources were available on the T1 family file, that tax filer, anything that was in the tax form would likely be available from the TIF as a custom request. I talked about the low income rates, but there's more to it than just these information. So I talked about socioeconomic information. There's a minimum that's available via TIF. So the family type, I mentioned that at the beginning, where you can tell whether a person is in a couple family or maybe a lone parent or is it children. So that's the kind of thing that's available in the TIF. You also know how many children and their age who are composed the family. You have the sex and age of each individual in the family. Currently, we don't have, what we have is female plus and male plus. So we don't know if it's a binary or another type of sex. Everyone is imputed because for confidentiality reasons. So children, yes. So children can be of any age. So the only criteria that is, that is required for someone to be a kid is they need to have parents. They need not to have children on their own. They need not to have a spouse. And we need to have been able to make a link between that person and their parents, and they live in the same dwelling. So it's possible that a mom that's 65 years old live with his 40-year-old son. That would consist of a census family on TIF. So that's a good point. Other tax-related information that's available on TIF would be the marital status. I talked about CPP, QPP, and EI contributions earlier. So there's a list of things that are available. And again, I think if someone looks at the schedule, they have a really good idea of what could be available on TIF. And in doubt, contact us and we'll answer. There's no such a thing as asking yourself a question and being stuck with that question. We're likely going to be able to help you out with this one. One thing that has been requested quite often is the disability status of people. So we have a little bit of information on disability status of individual, but they're not, they don't correspond to the census or any survey concepts. They would more correspond to whether or not you submitted a certificate to the CRA to have some credits or tax exemptions. And so it's for tax filers only. So we know that we underestimate the number of disability certificate for younger population, so up to 18 years old. When we compare with the CRA data about the disability certificate, we're very comparable. But again, it's not a concept that corresponds totally with what the census had or other surveys would have. So the TIF doesn't have the immigration status for the moment, so that citizenship status is not available for the TIF. This information is available at Statistics Canada. We're working on a project that to include that information. That being said, there's a subproduct of the TIF that I'm going to talk about, the Longitudinal Administrative Data Bank, that contains that information. So the short answer to the question is no, there's no citizenship status available under TIF, but maybe in the in the midterm, let's say, window, it's going to be available. But currently it's available from the Longitudinal Administrative Data Bank. That's a database in the RDC, but I'll go over that just in a few slides. So we talk about TIF. On TIF, there's 2 releases, which might be confusing for some of us. So I give you that. We have one. So the way things work is that the CRA provides Statistics Canada multiple versions of the tax data. The first version is actually in-house right now. So we received it mid-October, and we're currently processing it for 2023 data. So this file is and we call it the preliminary, but it doesn't mean that this file is the numbers that we release with this file is actually updated. It just means that this is the vintage of the file that we're using. So the data is released about 14 months after the end of the tax year, usually towards March or April. And in 2022, there were 28.9 million individuals, and that covers only tax filers. So you know how I talked about earlier non-filing spouses and non-filing children that were brought in from the CCB. So the preliminary file doesn't include those individuals. The statistics for this release are only at the individual level, and the focus is really more on charitable donation, RSP contribution, and wages, salaries, and commission. So this release includes 9 tables. If you're interested in more details about that release, I would refer you to the technical reference guide for the preliminary estimate from the T1 family file. The presentation will be shared, and the link is included in that presentation. The most recent data available is 2022. We're planning on releasing 2023 winter, 2024, 2025. So the one that we usually use when we create custom tabulation, and that is a little richer, is what we call the T1 family file final. That's a mouthful of words. So the release is usually during the summer, usually towards the end of June, beginning of July. That's pretty much what we're aiming for release. It does include tax filers and dependents, so anyone who hasn't filed their taxes but were able to be attached to a tax filer would be included. So we're talking about 30 million individual with 30.2 million tax filer and 7.7 million dependents. On that file, the novelty is you're going to get the family units. So you do have individual data still, but you also have family unit data. Very detailed income sources are covered with the release. Tax credit and tax characteristics are also available. So this really for that release, there's 37 tables that are released. And if you want more information, the link for the technical reference guide is also included in this sheet. As I mentioned at the beginning, there's in the appendix of the presentation, there is a list of all the tables that are produced. So if I count properly, 46 tables. And these tables are available through the web, and you might even have access through the community data portal. So now the interesting things, the most exciting things. So yes, okay, we know like this database has tons of people and it goes to low level of geography, but really what can you do with that? So this slide covers, and I'm good with that. This slide covers the latest release that we did in July 2024. where it was really interesting to see that the inflation of 6.8%, the highest inflation for a long time, I think 40 years actually brought down the median after-tax income by 4%. So before adjusting for inflation, there was a growth in the median family after-tax income of 2.5%, but then cost of living increased faster than the median family after-tax income, and we have a decrease of the after-tax income of 4%. What we were able to say in that release is that younger families were most impacted by the decrease in income. When I talk about younger family, it's families where the oldest person is 25 years old. What we saw also is that senior families, after having a big hit in 2021, were actually staying pretty stable compared to the other. So the low income rate decreased for seniors, and their income remained fairly stable in constant dollars. So after taking into account the inflation. Another point that we can say is that the median family after-tax income was at nearly the same level as 2019. And that's mostly because there was increases in Quebec, Yukon, and BC, because mainly driven by wages, salaries, and commission, because most provinces, the median family income fell in most other provinces. So that was what we would have released for the final. And so I mentioned earlier that for 2021 data, we discussed a little bit about the Gini coefficient. The Gini coefficient being an indicator of inequality between people. So a Gini coefficient of 0 is no inequality, and of 1 is a perfect inequality. And so we saw in 2021 that the Gini coefficient increased by 0.353 to 0.353 after a drop in 2020. So that's just something that can be done with the TIF, and I thought it was interesting to mention it. So that's for the final. If we look at, I mentioned that there's 2 types of release. So you have the final release, which I just covered, and here is a little bit more about when you talk about the preliminary, what can be said about the preliminary. So I think this is a really interesting slide. You see that the median wage decreased by 1.6%, mostly in 2022 compared to 2021 in constant dollar, mainly because educational services decreased and public administration also decreased. Now you see that in 2020 and 2020, the industry of arts, entertainment, and recreation, and the accommodation and food services industries were hit harder in terms of median income than other industries, and they're kind of catching up. So in 2022, they were going up 13 people in that industry. The median wage was up 13.8%, while it was like 11.9% in the accommodation and food services industry. So they're kind of catching up to come back to their 2019 levels. And the graph on the right shows you that when you look at the distribution of income, the lowest deciles in 2022 had the highest increase of their income than any of the upper deciles. So from the 4th decile to the 9th decile, you see that the wages actually decreased, while for the 1st, 2nd, and 3rd, the median income actually increased. Another example is the RSP contribution. So with the introduction of the TFSAs, we saw that the proportion of taxpayer TFSA being the, oh my God, I have a brain fart. Saving account. I can't remember what TFSA means, so I'm sorry about that. I'm gonna find it before the end, hopefully. That's really a shame for me. So the proportion of tax filers making RSP contribution have been on the downward trend, but the median contribution has been going up. In 2022, median contribution only increased in Yukon, and the contribution decreased especially for the 25 to 44-year-old. We also see that those with income above $500,000 had reached their maximum contribution in 2022, which is similar to 2020, which is a phenomenon that's similar to 2021 data. And another point is the charitable donation that we released with the preliminary. So here's on the right, you have a graph that shows the portion of tax filer who are making donations versus the ratio of donation to total income of that region. And so it's very interesting to see Manitoba is actually at the very top right corner with close to 20% of tax filer making donation for a total of 1% of the total aggregate income of that region. Alberta and Ontario are also doing fairly well in terms of donations. And if you look at Quebec, they have 17% of tax filer making donation, which is among the highest rate in the country. But their ratio donations to total income is about the same level as the Nunavut. So these are things that are interesting to explore if you're interested in charitable donation, RSP contributions, or wages, salaries, and commissions. So here I talk about how to get TIF data. And as I mentioned at the beginning, I'm not going to spend a lot of time on this. I believe that there's various ways for your group to actually access that data. But I will mention that there are free data of the TIF that's available through StatsCan website. There's a link in the presentation, and this is free data. Additional work can be done on a cost recovery basis, and that would be called for standard tables, which would be the web table released for other levels of geography. That's what initially released, and what's initially released in the web table is the national, provincial, and the CMA-CA level information. And the custom tables, this is really where you can play with the concepts. We discuss the options, we discuss your needs, we find the best specification possible. So the cost for these custom tabulation are usually much higher than the standard tables. Last way of accessing the data is through record linkage in the Research Data Center. But I'm not going to go over that in much details. If you need more information, feel free to contact the representative at Statistics Canada. So I'll skip over the next few slides. Or maybe, you know what, I'm going to stop here for a few seconds. So this is what the page looks like when you go to the website and you try to get the data. If you type TIF in the search engine, I guess, in the keywords, if you look at the lower portion of the screen, you have survey or statistical program. And so the annual income estimates for census family is the final version of the T1 family file. And the income and financial data of individual preliminary T1 family file is the winter release. And so by doing that, you would be able to get all the information that's been released for free in one spot. So might make it a little easier. These tables have what we call an initial view. So if you want to add more information or look at the actual complete content of the table, you can click on the add remove data or the download option to select additional items. As I mentioned at the beginning, the tables will include a vast spectrum of information, but not everything that TIF is able to offer. I really like this tool. So we have two visualization tools that are nice for people who are more learn or have a better ability to analyze data when they can see things. So we created what we call two visualization tools. And so you have one for the source of family income by family type, and you have another one that's the individual income. So similar tools, but different content. And in the presentation, I think the link is going to be available, I think, towards the end of the presentation. So I'm going to skip over these ones. And okay, so this is where I'm hoping that you're still with me. I know this is an hour. You know, I have so much fun talking about this. It flies by for me. So hopefully you get something out of this. But you know, at the very beginning, I mentioned the idea that, well, there's various sources of income. There's various income data sources at Statistics Canada, And I was hoping that presenting the TIF would kind of give you a really good sense of what the TIF is, but also I want to make sure that you understand that there are other information available. So the first one is the Canadian Income Survey. And this survey provides annual data on Canadians' income, and there are different income sources, along with some socioeconomic individuals and household characteristics. The data doesn't include the territories and focuses on large metropolitan areas. So it's a large sample, but it doesn't contain 38 million records. So releasing data for a lower level of geographies or very specific groups might be a little more difficult than for the TIF. That being said, they do have access to a little more socioeconomic individual characteristics. Another program that releases income data is the census program. So it's done every 5 years, covers the full population, has very detailed socioeconomic data, and it provides data for several levels of geography. Often people will revert back to the TIF when the census is not available. They are considered to be very close, but again, census includes households. TIF doesn't include households, TIF includes census count. So here you have the TIF that I talked about. Then I mentioned the longitudinal administrative database. So that's something that's interesting for researchers who are looking to obtain longitudinal characteristics of people, or who are able to play with the data and want to do modeling analysis. The lab does a little bit of custom tabulation. It becomes complex really quickly, but they also release some tables on the web. 9 tables, if I remember properly. And it does provide longitudinal database. So if you're looking at dynamic of income for people, it could be an interesting data sources. It does include the immigration status that we had a question for towards the middle of the presentation. The longitudinal administrative database is actually based on 20% of the TIF. So 20% of people within will be included in the lab. And on a yearly basis, that sample size is increased by 20% of the new people on the file. And the last item that's available currently is the administrative personal income master file. This file is really rich because it includes individuals in the tax world, which means that they could be tax filers, but they could have received any other slips from the CRA, but it's available only for a linkage at the moment. So yeah, so any of these programs usually can do some custom tabulation except for the APIM at the end. It just, we need to have a sample size that's sufficient to be able to release data. And there's data quality also that comes with smaller sample size. So this is just a little summary of what I discussed. Okay, so let's talk about the fun stuff, things that I've been working on over the last year or so. So there's a lot of work that's been done at Statistics Canada to benefit from other data sources that is brought in. And so I talked about the APIM. So there's definitely a model that can be used there to improve what the TIF is, which means including more information about non-tax filers dependent, more precise information for social assistance income by using the slip that's associated to that. Revamping some of the current standard tabulation to make it a little more modern and accessible. Use geography that's a little more precise than the postal code, so based on the longitude and latitude, and that's being developed currently, and eventually we'll get there. And also more timely access to data. So currently the winter release offers data about individual, but we're hoping to be able to have data available to users a little earlier than that in the next maybe 3-5 years. So I think that covers it. So maybe I can keep the presentation on, but I could also just, and we can start with the question, or I can stop sharing my screen. Saide, do you have any preference for that?
Not actually. It's kind of, up to you.
Okay. So let's leave it there. If someone asks questions about specific slides, then I'll be able to show the slide as we discussed.
Yeah.
So
awesome.
Happy to take any questions in French or in English if you have any.
Yes, so please add your question to the chat box, or you can kind of use the raise option on the tab above and unmute your devices and ask your question. In the meantime, kind of while you are preparing your question, I can kind of talk about the next webinar and our May kind of presentation or event. So our next webinar is on Thursday, December 5th, and it's about the IMDP data. So I'm going to share the link here with you. It's kind of the webinar will be presented by National Labor Secretariat. So it's not kind of CDP will host that, but we thought that would be helpful for CDP members. And I will kind of maybe pause and talk about the May events after we respond to the questions. So I leave it to you, Dominic.
Yeah. So thanks for that. So thanks for those who were kind enough to remind me that TFSA means tax-free savings account. This is the kind of thing, you know it, and then what does it mean? So thanks for that. So maybe we can start with Sophia, and if there's time afterwards, I'm happy to stay and discuss a little bit how to access the TIF data on the web. So Sophia, yours.
Hello, good afternoon, everybody. Well, first of all, it's a great presentation. It kind of assisted me a bit more in kind of understanding what the data set was about. I think my biggest question, as you saw, came from about the low income situations, and that's stemming from I worked prior in the US labor data, and they have something in Florida called the ALICE population, which is like a population of people that are not low income, but they are essentially like 2 paychecks away from slipping into that category. So that's the type of analysis I would probably use this data set to do. So my other question is coming along the lines of if you know of anybody that has used this data set to, for instance, do province level analysis, and how like did it yield anything beneficial like on the province level or on even like the city level?
Okay, well, I know that's there are two questions, right? So the first one is being the low income, and the second one is doing analysis at the provincial level, correct?
Yes.
Okay. So the low income, there's definitely a lot that can be done with the TIF. I know in the past we did some ratio 90 to 10. I know you could probably, like I mentioned earlier, when you design low income lines, you could decide what kind of income you want to use to define the low income line. So for example, if you're interested in looking at how government transfers impact the low income situation of people, well, maybe you could look at, maybe you could look at market income, low income based on market income, and low income based on after tax income, and just compare the rates. So that would tell you a little bit about how government transfers have an impact on low income situation of people. There's definitely approaches where you can use 60% of the limb or 50% of the limb. That's things that can be done. That being said, it's not standard things that we produce on the TIF. So yeah. So that's the first question. Second question, provincial level. So I did talk maybe I'll go back to my slides. I'll try to do that. About the provincial analysis. So that's the kind of analysis that we do on a regular basis on TIF. Sorry about that. I hope I don't get you sick. So in this slide, see at the end where I talk about the median family after tax income of all Canadian was nearly equal, but then I talk about most of provinces, the median family after tax income fell below the pre-COVID pandemic, so 2019 levels, except for Quebec, Yukon, and BC. So that's the kind of analysis that we would do on a regular basis. So I don't like that's totally appropriate as long as you're aware that this covers census family, that this will include territories, that this will include things like collective dwellings and Indian reserves, because we're going to include everyone. So anyone who has filed their taxes, basically. So definitely doing provincial analysis is something that can be done. Doing census division, census metropolitan area, fairly good quality in terms of precision for the geography. Someone asked the question about DAs. So does that answer your question, Safia?
Yes, it did. Thank you so much.
Okay, yeah, you're welcome. And so, Sharmali, and I'm sorry if I butcher your name, so I'm trying the best I can. So someone's asking, you mentioned that the TIF data is only 40% really reliable for DAs. Is the DA or CT data for the TIF better in major urban areas? So what I say is that the precision of the DA is good for 40% of the DAs that are available in TIF, I'd say. And so definitely when there's a bigger concentration of people, the precision is going to be better because we're working with postal codes. So if a population is very centralized in a location and there's a specific postal code associated to that DA, then we're going to be bang on. Like we're going to have 100% coverage between the census and TIF, plus or minus other technical challenges, but more or less, this should be pretty good. Same thing with the census tract. When we did some analysis for DAs, it was decided to not release it on a regular basis and not be part of the standard product because the precision was not as good as we would have liked to. For census tract data, it's more it's available because the data quality is the data precision is pretty good for these ones. So if you have follow-up questions, Sharmali, just you can, it's Sharmali, sorry. You can post it in the chat. Martin, would we need a custom request to link with the admin database to entangle composition effects over time? Quick answer is yes, but longer answer is, well, there's a national administrative data bank that's available in the research data center. So if you are a researcher, and you have some rights to access the research data center, you can submit a proposal to the RDC. That's going to go through approval and eventually come back and you have access to the lab database in the RDC. That should help you be able to entangle composition effects over time. You wouldn't need a linkage between database because it's already available in the RDC. It's not available to the public, so there's no public use microdata file available. It's really available in secure environment for the reasons I mentioned at the beginning, confidentiality reasons, and to ensure privacy. So if you have follow-up questions, post it in the chat. I'll respond. If ever there's a specific admin database that you would like to see linked to the T1 family file, that's also projects that the Statistics Canada can lead. There's a specific team at Statistics Canada, we call them the socio-demographic linkage environment, and they are responsible for such projects, linking between an administrative data set and TIF data. So for example, if you have clients that you're providing help for, and you have a sample that's big enough, then and you have enough information to be able to create the linkage between the files, that could happen. So Alan is asking if the data can be broken down by citizen, permanent residents, and non-permanent residents. I did mention at the beginning that we don't really have the citizenship. This is something that is being worked on. I don't know if it's going to be in the short term available or even in the long term, but it's in the plans and we're hoping to make it available. Again, the National Administrative Data Bank is something that includes administrative data. And you know what? I think at the end of this presentation, before I send the final version to my colleagues here, I'm going to add the list of tables from the lab, and that can help you because there are some immigration status information, if I remember properly, on the web tables that are released. If you are interested in doing more analysis and more precise analysis, I would really recommend either sending a custom request to the lab through StatScan, the usual channels, and maybe the Mike can help with that process, or someone from the team from CDP can help with that process. So custom requests can be done, or access to the microdata in the RDC. So I hope this covers that. there's definitely challenges with the immigration status. What is the best data to use to evaluate the level of income for family with low income, especially for affordability? What is the best data to use? So what you're looking at is really more trying to identify whether they can afford their housing, John? So if you're willing to unmute yourself, the discussion might be easier than typing in the chat. I'm not sure to understand. So especially for affordability, I guess you would probably be interested in income of households because households would be living in the same dwelling. And so if affordability you're referring to housing costs, then that's probably what I would recommend. There's definitely several programs of Statistics Canada looking at housing. One of them is the two of them actually, well, two of them that I know of are actually within the division that I work in. So we would talk about the Canadian Housing Survey, the CHS. There's also something else that's called a very similar name, Canadian Housing Statistics Program. And currently they release a lot of statistics on ownership and intergenerational. I know they released an article on intergenerational mobility of assets. So maybe those sources would be interesting. The census is definitely one of the good source for that. They have a lot of information about housing characteristics and a lot of can be done with the census. And again, I think household might be best here because we're looking at housing, if I understand properly. Yeah, so core housing needs, I would say CHS could be a source. It's simple, or the census would probably be the best. And yes, I would probably recommend using household at that point. Housing or water utility affordability. Oh, that's really out of my field of expertise for this one. I have a hard time answering. Yeah, I can't really say for this one. CMHC, yeah. So I know that there's partnership that between StatsCan and CMHC with the CHS. So maybe CHS is really the way to go for this one. Could be, yeah. Sounds, yeah. I'm not sure. Again, I'm debating whether I direct you to the CHS or the census, but Mike's saying that the census is probably the best source. Yeah. Lynching up against the privacy. Actually, this is something that's been done in the past. I think the labor force survey actually talks about some of that, if I'm correct. There's interesting. There's definitely some information that's available at StatsCan and some tabulation that can be done. But in my division, in my center, where we're more geared towards income and housing, I would say that this has to be a custom tabulation. Now, if you're interested, maybe the labor force survey would be able to serve you on that one too. That's for Martin. So while I'm waiting for other questions, a question that I had a while back was about the childcare expenses. So it's a tricky question. Just remember that the data that we're using is based on what did the people reported on their tax form. So your tax filing is actually really, really important to us, not because we're looking at your individual records. We don't really worry about that. We don't look at that. What we are interested in earning patterns and geography and family. So anyways, all that to say that childcare expenses is available from the T1 family file. Now it's childcare expenses that are deductible for your tax purpose. So it might not cover all the childcare expenses. Now I know that the Canadian Income Survey also releases some statistics about the childcare expenses. And there's another data source that the Survey of Household Spending that releases data on childcare expenses. These three data sources are expressing their statistics using various denominators. So for the ACHS, the Survey of Household Spending, it's actually per household. So whether you have expenses or not, you're going to be included in the denominator, and your numerator will include only those who have expenses, obviously. While for the CIS, I believe that it's it's the average income or median childcare expenses for only those with expenses. And so when I compared the three data sources, we were more or less, we were very similar in terms of averages and median. But it's not exactly the same thing. So it's difficult for me to say which data sources should be used for information on childcare expenses. I would have a tendency to favor the survey of household spending with the challenges that they have. Knowing that the CIS, the Canadian Income Survey, is based on some of the things that are reported by the respondent, but also tax data, and the TIF is literally based on tax data. So it all depends on the purpose of your research. Yeah. Okay. Right. Well, again, the deductible claim for the credit is definitely different than the one that's paid because it doesn't include everything. People have a tendency to just report what they need to report in order to get the best out of the tax world, and that's what we get. Yeah. Which would be, yeah, absolutely. Tonight would be great to have automatic tax filing, which would be great for helping people get their benefit. Would that make change make scenario? It's possible that it would improve the coverage of the data. We've noticed, I can't remember what the time was, but when we built the lab, we've noticed that when there were more credit and incentive to file taxes, the tax filing rates the increase of tax filer was significant in the years where there were incentives. So most likely, if the automated tax filing was implemented, there would be a larger coverage of the population and possibly more precise estimates. That being said, we do a lot of quality control to the data, and we ensure that anything that's outlier or that doesn't make sense based on the information that we have is actually not kept in the data. So it's very high quality data that we're able to release. But yeah, I think this is totally legitimate. I know that on the land recently we added what we call the return type variable, which allows you to see if the person filed electronically. There are still people filing paper copies, and so these are the kind of analysis that could be done using the RDC file. Well, thanks for that, Mike. Data child care credit amounts.
Great. I think we have 2 minutes left to the end of the webinar.
I know.
I remember there was a question about showing how to use TIF data on StatScan, or how to find it. Yeah, if anyone wants to stay longer, you're welcome to. And if others not have any questions, so feel free to leave if you like.
Thanks, Liz.
Thank you for joining us.
Thanks, Michael.
Thank you so much.
Clapping.
Great presentation.
So nice to be able to share what I spend my life doing with other people than my colleagues as well. So thanks for listening.
Thank you so much, everyone.
Okay. So I can definitely take a little bit of time going over how to get data. I don't know, Michael, do you wanna jump in for that? I'm not sure how the CDP manage the custom requests or the requests on that front, so I'm not sure how you want me to go about it.
Well, the catalog is obviously the best place to start for getting access to what we order from the TIF, and Sadia had put a link up there, and we have all of the standard tables on all standard geographies in there. In addition, we have a couple of custom tabulations that we get on working poor, on working poverty and income inequality. And I should have mentioned that we are actually going to be updating our income. We updated working poor with 2021 and 2022 tax data this year, and we're going to be doing the same with the income inequality data, getting 2021 and 2022. So I mean, I think it's how to navigate our catalog. Hopefully people that are here are familiar with it, and we have other resources to help people with that, or you can just contact me directly, or if you have any issues finding the data. But yeah, it's all there. I think probably the question was sort of towards what can we get from the StatsCan website. So I'll let you answer that. And if people have questions about how to get tax filer data from the CDP catalog, I would say start with the catalog, have a look, use the filters to find it, but certainly get in touch with us if you have specific questions. We're more than happy to help.
I think you're on mute, Dominic.
You're right. This is a classic one, eh? Like it seems like it happens every single time. So yes, I can go over how to get data with the StatCan website. As Michael mentioned, I think using the catalog from CDP might be a really good option. But if you're Googling and you're not logged on and you want to look at what StatCan does, I did put the link in the presentation to the StatCan website. And so there are two types of product available for TIF. So there's the T1 family file final and the T1 family file preliminary. For each of them, there's a specific name to it that's used in the StatCan website. So that's one thing. One of the big advantages, you're going to have a time series that goes usually far back as 2000 up to 2022. There's also the visualization tools that I shared earlier. But if you go, oops, no, I don't want to do that. If you go go here, so if you click on StatCan's website, or if you search on Google, I guess if you were to search StatCan data on a browser that you feel comfortable with, I talk about Google, but Microsoft Edge, Safari, Firefox, there are so many out there. So my apologies for using only one. But if you are to search one StatCan data, you would probably end up somewhere in the StatCan website. So I'm gonna, you know what? Why don't I? Because we're such a cozy group now. I'm just gonna share my screen for us. I'm gonna bring up the StatCan website so that you can see. It's gonna make it easier. I'm trying to share it. Choice of technology. Here we go. Okay, so this is the main page that you get to when you're on StatCan website. And there's a lot, like you can read about the daily stories and several other items, of which access quickly to the census information is towards the end here. So there's a lot of things that you can see on the main page. But we can also see our new chief statistician, who's André Loranger. So StatCan website, see at the top where there's like several little items. So the second one is data. So if you were to click here, then you're going to get to the window I was sharing with my presentation. Then if I type in the keywords T1FF and click enter, I can see that there are the products that are using TIF. So a little more than just TIF is going to be extracted. But you can see that you have the annual income estimate for census family, which is, I'm going to go back to my presentation for a second, which is the T1 family file, final. And then you have the income of financial data and individual preliminary TIF family. So if I were to click on one of them, I would only get the tables that are associated with that one release. But let's say I want to say, well, this is a good one, but I like okay, let's take the first one. I like the one with income sources because, you know, it's interesting. So when you click on a table, this is the page that you get to. You have options to quickly change the geography that you're looking at by using that little arrow on the left side that's under Customize Table Geography. And so here you can search. So let's say I'm interested in Winnipeg. Then, oops, not Winnipeg. Then I could click on that, and then I would click here, there, and then apply, and then the table would actually produce data for Winnipeg from 2018 to 2022. So that's one way of looking at the data. Another way is to click on Add Remove. And that way, a lot of people miss that one because it's subtle. But if you click on sex, you could have like the data broken down by sex. You could have various age groups. So if you are to click on the little plus sign here, you're going to have the various age groups that are available. This tab would tell you the characteristics. So if you expand again, the little plus sign, you can see here it's by income level. And yeah, it's by income level based on your total income, not the income after tax. You have the median total income as well. And then you can decide the reference period. That's where that's kind of fun because you can go back to 2000. And then you even have the option. So if I were to apply that, let's look at what it looks like. It doesn't really look great. Like you have Canada and then you have to scroll over to the left to see more, and it kind of gets a little tricky. So you can customize layout and you can decide what you want to have as a row and a column and then apply. So let's say I want to have like the age group as a row instead of a column, and maybe the sex as a row. Then it's just going to change the look of my table. I hope I'm not going too fast, but interrupt me if I'm going too fast. And so now what's at the top is the years. And then when I scroll down, then I'm going to see my characteristics on the left. Another option that I love doing, because I know my data and I want to play with most of it, I click on download options here. And these download options offer you tons of options, as it says. But you could also download the entire table. And then having the entire table, it's more like a vector. So it's one line is your entries, the other line is your statistics. So the table doesn't have a lot of information. I'm not going to download it because it's going to be really big and really slow. But so if you were to do that, then you would have a CSV file that you could play with, either with a software or with Excel or any tool that you're using. It's kind of in the format that's easily manageable. Oops, my apologies. So I think that's for the website. I'm just trying to see if there's anything else I want to share. I think that's it. Let's go back to the presentation here. So I went through this portion where you select your tables. I didn't go through all the tables, but this is what it would look like. Then I went over the options here to navigate, which is in the presentation. So you see the yellow arrow is going to tell you where you can click to help augment the content of the tables. Then you have the visualization tools that I talked about. Again, these ones, I don't know if it's going to work. I'm going to click on let's try the link in I don't know if that's going to work. If I try the link in the presentation, is it going to work? Oh, yeah. It should work. So if you were to open that, and it brings it's a Power BI tool, based tool. And so here, this is the initial view, and it's for 2022 data. But if you look the graph on the far bottom right, it goes over time, so 2000 to 2022, and you can see this is in constant dollars, and you can see the evolution of the count of families in Canada and their median income. So see how in 2020 we had a little increase in income, so definitely was more related to government transfers in that year, and now we're kind of going back to a similar situation than we had prior to pandemic. If you were interested to look at this tab is only going to change from total income to after-tax income, and it impacts only that table to the right and the graph here. Income sources is based on total income. So the denominator is total income. And then you can decide that you're interested in looking at situation in lone parent families, And you see that the wages are a little less important than the government transfers for lone parent families. And you can even go and try to find like for other geography levels. So that's kind of the family one. There's a similar one for the individual where you can point and click. If you are interested in accessing the actual microdata that was used for that, you can click on the top of the visualization tool. There's a little arrow, and then you have the tables that are listed that are used to produce the table.
Just a note, which I'm hoping is not going to come out too much like a plug, but when talking about when you're deciding where to get data from, I think it's good to note the geographies that are available. One of the reasons why we do order all the standard tables is because we're getting it at geographies that are not available on the website. So we're ordering data for census subdivisions or census divisions or census tracts, which are not available here.
Yeah. So definitely. So I'm just going to reinforce that. So at what's available on the web is really the Canada provincial territorial information plus census metropolitan area, census agglomeration, and census tract, non-census metropolitan census agglomeration. Anything below that or different to that would need to be probably accessed through the community data portal or the catalog that's available. Yeah. Oh yeah, and just a reminder that even though they are included, so if you have a time series that goes from 2000 to 2022, you do have change in census boundaries in usually census years. Sometimes it's a little off by 1 year, so it took a year before we were able to catch up. But there's a footnote that tells you what census geography was used for the various geography available.
I've gotta go, but thank you so much, Dominique. As
Michael.
always, these are great presentations, and you are a wealth of knowledge.
Thanks
again.
so much. Nice seeing you.
Thank you, Dominic. I feel like this is kind of the end of questions, and it's 12 minutes past. So thank you so much for staying longer, and thank you everyone for joining us. So we will post the recording and then the presentation slide and the community data program webinar page in the coming days. Thank you everyone, and have a great rest of your day.
Thank you so much.
Thanks everyone. Thanks for staying longer.